Central banks worldwide have been amassing gold reserves at an unprecedented rate, underscoring the metal's enduring importance in global economic systems. Gold has a unique position as a financial asset entirely outside the conventional banking framework. Unlike fiat currencies, gold's status as money is intrinsic. It does not require validation from any governing body or institution. The Bank for International Settlements has highlighted that gold stored domestically carries no political risk and is free from counterparty obligations. This means that owning gold does not depend on another party's promise to pay or fulfill a debt, something no other financial instrument can claim. Over centuries, gold has proven itself as a reliable hedge against inflation, maintaining purchasing power across generations and economic upheavals. Owning physical gold provides a tangible form of security. For instance, a small 1-ounce gold coin is not only valuable, but also portable, allowing wealth to be concentrated in a compact and durable form. This accessibility makes gold a critical asset for individuals seeking financial independence outside traditional systems. Unlike digital currencies, gold cannot be erased or devalued by technical or policy failures, making it a cornerstone for preserving wealth during times of crisis. Gold is not only a hedge, but also a primary currency metal historically used to anchor financial systems. It serves as a standard during currency revaluations, particularly in the aftermath of economic crises or system reset. Silver, while also a monetary metal, occupies a secondary role due to its extensive industrial applications. Whereas nearly all gold ever mined is recoverable and stored, silver is consumed in various industrial processes, electronics, medical devices, solar panels, making its availability more finite over time. These differences underscore their distinct roles in a financial reset. When central banks conduct overnight currency revaluations, it is gold's intrinsic value that recalibrates the system. Wall Street's influence diminishes in these moments, and the control shifts to central authorities. During such revaluations, gold and silver will move closer to their fundamental values, reflecting their historical roles as true money. This process bypasses speculative market mechanisms, allowing these metals to reclaim their monetary significance. The advent of digital currencies, such as a digital dollar, might appear to offer a solution to systemic financial problems, but in reality, these currencies merely digitize existing flaws. Without addressing the underlying issues, such as unchecked debt accumulation and irresponsible monetary policy, digital currencies cannot stabilize the system. What absolutely must happen is the eradication of unsustainable global debt, currently measured in the tens of trillions of dollars. This debt, amassed by governments, corporations, and households, must be burned off, which is precisely what hyperinflation achieves. Hyperinflation is not just a random event, but a deliberate and predictable phase in the life cycle of fiat currencies. By rapidly devaluing money, hyperinflation effectively wipes out debt, but also destroys confidence in the currency. As people lose faith in fiat money, they abandon it in favor of barter systems or alternative forms of exchange. This transition to localized trade is where silver shines, as its smaller denominations and divisibility make it ideal for day-to-day transactions. Hyperinflation leads to surreal economic scenarios. Imagine a pack of gum costing $112,000 or more, a price tag that may seem absurd today, but becomes plausible when money loses its value overnight. To regain public trust, governments historically resort to lopping off zeros from the currency and conducting overnight revaluations. In these instances, gold's value against the currency skyrockets. For example, in Venezuela, gold surged over 3,500% during one such reset. Remarkably, the country has experienced multiple revaluations, each time attempting to restore faith in its monetary system. These revaluations, while temporarily effective, often fail to address the root causes of instability. It typically takes 3 or more iterations before governments stabilize the currency by introducing a gold-backed component. A partially gold-backed currency enforces fiscal discipline, compelling governments to operate within defined limits. Unlike today's fiat systems, where money printing is effectively limitless, a gold-backed framework requires accountability and restricts reckless expansion of the money supply. One of the most alarming trends in the current economic environment is the erosion of purchasing power. According to the Federal Reserve's own data, the U.S. dollar has lost 97% of its original purchasing power since its inception. What remains today is effectively worth only 3 cents of its original value. Inflation, particularly the accelerated form known as hyperinflation, further diminishes this remaining purchasing power. Each new wave of money printing devalues the currency already in circulation, exacerbating the problem and accelerating the path toward collapse. This erosion has direct consequences for everyday life. Essentials like food, housing, and energy become increasingly unaffordable, forcing individuals to confront the harsh reality of declining standards of living. Hyperinflation, unlike regular inflation, moves at a breakneck pace, leaving little time for people to adapt or prepare. Many individuals remain complacent, lulled into a false sense of security by rising stock markets and speculative investments. Meme stocks and tech booms create an illusion of wealth creation, diverting attention from the systemic risks underlying the financial system. Gold, often dismissed as too expensive when near its historical highs, is paradoxically undervalued relative to its role in signaling currency failure. A rising gold price reflects the deteriorating health of fiat money, yet this critical warning is often overlooked in favor of riskier investments. The time to act is now. Delaying decisions to acquire tangible assets like gold and silver can leave individuals unprepared for the rapid changes ahead. Once hyperinflation sets in, the window for action closes swiftly, leaving only those who prepared with the means to weather the storm. Preparation is not merely about financial hedging, but about ensuring basic survival during and after a systemic collapse. Gold and silver provide the foundation for wealth preservation, but equally important are securing resources such as food, water, and energy. These essentials form the backbone of any sustainable plan to endure economic upheaval. Community building is another critical component. In times of crisis, local networks of trade and mutual support become lifelines, offering stability and resilience. Silver's practical use as a barter currency complements this shift to localized economies. Shelter, energy independence, and self-sufficiency in essentials like food and water further enhance individual and community resilience. History is replete with examples of financial collapses and the behaviors that precede them. Insiders, those with access to privileged information, often exit vulnerable positions well before the public realizes the danger. Meanwhile, average investors remain in the system, lured by rising markets or reassurances from authorities. This cycle repeats itself with devastating consequences for those caught unprepared. The urgency to prepare cannot be overstated. Procrastination is a dangerous gamble, as the signs of systemic failure become increasingly apparent. By the time the collapse is undeniable, the options for protecting oneself may have vanished entirely. The current trajectory points unmistakably toward the end of the fiat currency system. This transition, while disruptive, also presents opportunities for those who take proactive steps to secure their financial and physical well-being. Gold and silver, as timeless stores of value, offer a bridge to stability in the face of uncertainty. Coupled with preparation in other critical areas, these assets provide the foundation for navigating the economic reset and emerging stronger on the other side. Ultimately, the value of freedom and self-reliance cannot be overstated. The decisions made today will determine the ability to preserve not only wealth, but also dignity and independence in the challenging times ahead. Acting decisively is not just prudent, it is essential for survival and success in a rapidly changing world.